Hello traders, Gary Wagner for Trending Markets. It's Wednesday, 28th day of October, 2015, approximately 10:50 in Honolulu, almost 5 o'clock in New York. The FOMC meeting has concluded, markets have closed, and we have ended on a tremendously strong rally to the upside after seeing some pressure come into the market earlier in the day. Dow Jones Industrial Average closing up over 1%, almost 200 points in terms of the net gain, 17,779.52. We sent out a special trade alert recommending that we enter the E-mini S&P from the long side. As you know from all week and last week, it was to me a matter of timing or positioning ourselves to get back long on this market. I believe that we will, in fact, see the U.S. equities trade to the highs, recent highs, historical highs that we've seen in the Dow Jones Industrial. Of course, that top puts you in over 18,000, 18,300, 18,400, being just above the historical and record top, 18,400 being right here. We have never really touched it. We've gotten close at a couple of points, but haven't taken that out. Of course, now we are back above this particular point, meaning 17,600, which to me is a level that was former resistance and now should become support right in here when we look at the Dow Jones Industrial. Of course, this is a weekly chart. Considering the moves that we saw last week, which was a tremendous upside surge, we had small corrective action on our daily chart or over the last couple of days. In fact, let's go ahead and pull up a daily chart so we can see that. But that's these 2 days right here, these two small red candles. And that's what really got me to a point where I wanted to position ourselves, but it was simply a matter of timing. Now, we, I believe, hit a very, very good trade underway because once we got into the trade, I sent out that trade alert and the market was trading roughly at, call it 2068, 2067, 2069. But below 2070, we closing at 2082.25, up 21 points or over 1% on the day. I also made a recommendation to place stops below our 200-day moving average. And so on today's report, I kind of want to go through why I'm putting my stops where I am and what I'm looking for in terms of an upside target. But this is that 200-day moving average right in here. And my sense is that we have seen really our 50-day and 200-day moving average give traders a lot of very valuable information. For example, as this market came up and it did get top heavy, this is where we pulled profits at 2000. I think we got in at 68, but that was 1968. And then we got out just at around 2000 as the market came down. But if you take a look at this 50-day moving average, that's what this red line is. That certainly ended up being absolute support in the market. And then we saw this market track higher. This, of course, being through last week here. And we closed on Friday above our 200-day moving average. I think that that is a really important level. Now, over the last couple of days, we did see it kind of touch below that area, but not by much. And then today, of course, up and away, up 23 points. And now it's just ramping above the 200-day moving average. So I think we'll keep our stop there. Of course, we already have decent profits on this trade, but I'm looking for a home run, so to speak, on this trade, because had we been able to maintain, or if we maintained, it's not had, but if we had maintained our long position over at 1968, we would have caught a tremendous rise that we missed. So I want to play this a little bit looser to the vest, so to speak. And if in fact this market wants to come and test these highs at 21.25, which I believe that they will, we certainly want to be long this market through this dynamic move up. It would be tremendous profits on this trade. So traders, will keep our stop where we are. I really am comfortable with the fact that we got in when we got in, because once we got into this trade and I looked at the market begin to trade, and you can almost see it on some of these short-term charts, but even a 240 doesn't do it justice. You almost have to take it down to whether it's a 60, and even 60 doesn't do it, or 120. We'll have to take this down. Let's just take this down to a half hour. And there we go. And this will give you an idea of the kind of moves we saw. So 68 is really roughly in this area. So I saw this market genuinely sell off. We looked at this. We also looked at gold, because gold, I believed, was going to come up and test some highs. You probably just watched that report, but was going to test some highs, and it hit the top of our projected B to the number, so to speak. But this market came down, and again, this is a 30-minute chart. So this is 8 o'clock. This is really when the Fed meeting concludes. They're digesting information, and then from there we have, over a period of roughly an hour and a half, we saw this market move from about 1257. We got in, the market was trading roughly at this point right in here, 67, 68. This was the point I entered it, because I saw a real good recovery. I just didn't believe that we would see the market spike in the way that it did, but I'm certainly very pleased with the performance, because we closed above 77. That was important to me, because that was the former highs that we saw in this market. Over this very short period of time, we absolutely took that out. We've exceeded that, and now we could see a little bit of backfill come in. But as I said, my sense is that we've got a pretty decent trade underway. Depending on how you want to play it, already you've got some pretty good profits, but I believe that over time we could see this market really challenge the most recent historical highs. And if in fact it does, again, we'll have to pull back to a daily chart, but if in fact it does, we've got some real solid ground to cover from where it's at 2084.50, our current print, to above $2,100. So we did take a play. It's been a good play, and we did not take any kind of play in crude oil. I'm absolutely thrilled about that, because I got this one wrong. I thought we'd see some continued weakness. We had a report come out, well, supply demand, so to speak, but a supply report come out, and that just spiked this market up almost 7% on the day, $3 rise. And I believe that we were going to see this market come down and test anywhere between 40, the high 39s. I didn't get this one right, but we also didn't place a trade there either. So in either case, we're long the S&Ps, we're not in the oil market, and it's just the way I like it. This has been Gary Wagner, wishing you, as always, good trading, and we certainly seem to have achieved that today. We'll talk to you tomorrow for another Trending Markets. Bye-bye.